This week on Sylvia's Traders Lounge.
As far as day trading, that will give you and me the flexibility where I trade and I set up my trades starting at 8 and I'm done by 11. So there's some pre-market work, watching the trades set up, waiting patiently, and then trade the trade. Are there days that there's no opportunities? Yes, there's about 15% of the 252 trading days. So we're looking at about 38 days that are absolutely spectacular home run trading days. And then the others, guess what? It's going to be small profits, and you got to be comfortable with that.
Sylvia's Traders Lounge welcomes you all to yet another webinar where we learn, trade, and profit. We shall be giving you trading insights on technical analysis, fundamental analysis, risk management, and trading psychology. Because we've had Jim as well on other trading sessions before. This is actually our third time
Yes.
to have you. We're truly happy and honored to have you again. So if people need to check out like your trading bio, and they can refer to the previous sessions on our YouTube link. So for today, we're gonna do it a bit different. We'll do more of the live trading setups. You'll take us through maybe your most recent trades, what you'd be looking to trade today when the market opens in a couple of hours. And then we will just go with the flow. So it's more of an open-ended question and Q&A. Yeah, so
Sounds great.
yeah, so maybe as we start, because I normally see you contributing to is it a TV show called Business Fast? Like your analysis and everything. So maybe you can tell us what normally makes your stock list check? Like what are your metrics for picking a stock that you would be able to trade in a particular day, for example?
Yeah, for sure. Well, typically when I am looking for my stocks to trade in the morning, as Sylvia mentioned, I am a mom of two. So I arrive at my trading desk about 8 in the morning. So looking right now, it's going to give me a little bit different parameters than what I would find in 2 hours, because there's more that are going to have over 100,000 that are active. And I'm looking for stocks that have gapped for the day, as opposed to the stuff that I put on Business First AM. Those are more of swing trades that I'm looking at the daily chart. I'm looking at the big volume. Are we above that volume? Are we below the volume? And about the seasonality. So there's two different baskets to look at: the day trading versus the swing trading, and different parameters. Volume, of course, is prevalent in both of them. With the day trading, when I get to my desk, 8 o'clock in the morning, I have a scan that is already set up. And let me just sort of see if I have a scan that's already set up. Let's see, I can share it. So I can share what I'm seeing just at the moment.
Yeah.
All right. Let me make a big screen for you guys so you guys can see. There we go. Okay, so you should be able to see this. This is from Street Smart Edge. And you can see right now I have my up scan, I have my down scan, I have my parameters set, and I have it sorted largest volume to smallest volume. So I'm going to look and see, hey, what's the biggest gap? I also look to see what's our percentage change. Well, we can see Baba had a pretty big percentage change, and NVIDIA as well. Usually this is going to have anywhere. I mean, this is a small amount. We have small movement so far. We'll see what happens the rest of the day. But right now we only have 4 on each. Again, it's much earlier, 2 hours earlier than when I'm typically looking at it. But I'd look at it and I'd say, okay, well, I've got NVIDIA there. We've got the previous close here. I can also see the shares outstanding, which is interesting to me, so that I will know if there is a short squeeze happening. Sometimes we'll get one that has 1 million, 2 million, 21 million, right? That's really low float. And so that's likely a massive run up of the shorts, and it might very quickly come down. So first I'll create my list looking at the volume and the gappers and the charts that look good, right? So then I'll switch screens. So we've got, I'm going to do really quickly. I will just create a little list over here. I will call it Sylvia, and we will take the top ones right here, and we'll just sort of map them out. And then actually it's doing a little bit of pre-work for me for later, so that when I drop off my kids, some of my work is already done. All right, I can just adjust the levels. See, win-win. All right. So 2 seconds while I just type in the stocks over here. Actually, I can change the screen so you can see while I'm doing that.
All right.
All right. Let's go here. I will move us over here. There we go. You should be able to see the new screen. Yes?
Yes.
Awesome. Okay, so I'm just taking it right off. And I absolutely love TradingView. This is my go-to because I can use this on the go. Oh, some AMC apes are going to be happy seeing that it's on the pre-market list, movers. So it's my go-to because I can see it exactly the same on my phone. So anything that I do here when I'm using the cloud base is going to set it up so that I have it exact same charting right on my phone. So next, I'll look at, I have my daily chart over here. This is a 45-minute. Let me just close off, take this off a bit. So I'd look at it and say, hey, eBay was on the gappers lower. It's an earnings trade, right? So we know right off the bat, hey, probably not the best for options. Why? Because of the premium decay, right? An earnings trade, the premium will ramp up. It's sort of like a bell curve. Premium will ramp up right until open, and then boom, it drops off throughout the day. Further out options are going to decay less than nearer options, but maybe not the best option trade. Now, I have this really cool volume profile. It's called the visible volume profile that I absolutely love. So I'd go to see, hey, from earnings, where was the big volume traded? It's going to move right here probably. There we go. Let's see if it moves for us. There we go. So we can see, hey, this volume profile, meaning the point of control where the most volume was traded after the earnings announcement, which is what I want to know. Where are they? Where are the big guys, right? I follow the dark pools to the market. I find that the visible volume profile is showing you in real time where these really big trades are. But let's make this a 5-minute chart instead of 45 minutes. And I do apologize. My kids so kindly shared their cold with me. So I might have a bit of congestion while we're doing this, but just to give you a heads up on that. All right. So we come back, we see the earnings announcement happened. Here was their volume last night, when it happened last night. And here's their point of control this morning up at 45.53. So if I were to bring this down, I would map out my trade. And I'm looking to see high probability levels. I'm looking to see where is their point of control. Where do they have their money right now, right? So I'd say probably for today, unless something changes dramatically, pre-market today, if we go below 45 or above 45.80, those are the higher probabilities for this to have a big move today, right? If we bring it in just to see what they did this morning, the volume profile will show you whatever's on the screen, right? So right now for pre-market trading, not a lot has happened. We have where it started at 4, but it really hasn't moved that much. The SPY would be completely different.
All right.
So when they're looking at it, we can see, hey, down here, it's still, we have 45.58 is that point of control for pre-market.
All right, that's a very good introduction. At least we've gotten some like basic understanding of how you normally conduct your trading and how you normally pick your top most stocks based on the previous last closing price for the previous night, and also the volume profiling as well. So thank you for that introduction. So you can tell us more about, you're an author of FMJ Trust Transition Trade. Who's the most memorable female trader from that book that like just comes to the top of your head, and why?
Well, probably Stephanie Kimmerman. I know you've had her on as well. And she and I work together actually in the training pit, where we help to educate trainers. So over at thedarkpools.com at the training pit. So we help to educate traders from zero experience or traders that have experience and they want to come and learn around trading around the dark pool. They'll learn all about it. So it really is life-changing once you figure out what the dark pool is, which is where the really big money of the market, the billionaires, are trading, and they hide their trades. They don't really want to show everybody what they're doing. And so we see like 2.5 million on Amazon and 6.5 million on Apple that were just traded recently this week. Apple was 149.80 and Amazon was 95.25. Are they buying? Are they selling? Well, let's look and see as well. Where are we now, right? Let's go to a daily chart. Because those are two that you could look at and you could say, hey, maybe these are going to be massive swing trades to the upside, or, you know, maybe they're not. Maybe they're going to be selling. So for Amazon, we're up above that 95.25. We're at 96.15. Are they going to take it up and take it down? It's still very early, right? But 2.5 million, we can see we had a 3 million, 2 million, 1.1 million. We've got 21. These are market on closes down here. And then, so Amazon, not sure just yet, because we're coming into these moving averages right here. I'd say up above 98 would be more confirmation, clear skies to move back up again. Apple, 149.80. We are below that, right? This green line is 149.80. We're below that. Again, we're hitting these moving averages. We can see, I just taught you guys a little bit about that volume profile. Looks like that's up at 152. So when it's above us, it looks like selling. Plus we had 6.5 million over here on Tuesday. We're below that for now. As long as we stay below, likely they were selling. Apple is a major contender in over 100 ETFs of the market. Big player in the SPY as far as weighting, QQQ as far as weighting, TECL, TECS, those are some ETNs that are leveraged. Not a recommendation to hold long term, but a short term pop or day trade for those. If you know that there's big prints on the tech stocks, right? You're able to trade according to those prints, the really big dark pool money, and you see, hey, oh my goodness, dark pool is above us. You always want them at your back. You always want them supporting you at your back. So that means if you see that there's a big major trade, guess what? They are taking it down. At this instant, we're down below it. Should we go above it? You got to switch. You got to flip. You can't, there's no wishy-washiness, right?
Yeah.
Then that means you're going to go against the billionaires. Do you want to go against these guys that have billions of dollars? Probably not. It's like trying to stop a freight train with your hand. Not going to work, right?
All right.
So,
and now that you mentioned QQ4, earlier on in the week, like I like to look at the economic calendar. So like I'm aware of what's happening, like the general market outlook for the week. And so like today, they're like key, like I saw this Euro inflation rate report coming out. There's the US dollar real consumer spending report for QQ4. There's also the Fed Bostic speech. So do this macroeconomic news-related reports do affect like your trading in any way, or your trading is technically based on like full-time?
No, that's a great thing to bring up. I actually do check the Forex Factory every single morning. And that's free, as you know, I'm sure. So Forex Factory will give you that daily analysis of what's coming up, or you could look at it for the week or the month. And I definitely look at them every single morning to see what's coming up, to know, hey, here's the volatility time potential for the day. The market in itself tends to have, 15-minute increments where it will trade in those 15-minute increments. And then you add in an announcement. And do you think the big guys get the news through a little bird? Hey, what's going to happen at this time? They already know. They've already placed their trade. And so if you are prepared, you're able to trade with them and know, like an earnings event, when there's FOMC that's coming out, many times it's better just to wait until 2 p.m. or till the minutes come out, and then it's going to move at that time, and you can capitalize it on that time rather than being in the trade and then you go, it goes against you and you're not prepared. So it's better to trade up to it and then after it's happened, not necessarily over the actual event, more particularly for FOMC. And if there's an oil numbers announcement or natural gas numbers announcement, because those will definitely directly affect oil stocks for oil numbers, UNG for, natural gas for natural gas stocks. And oil numbers will affect the market overall. If it's going to cost more to get items to their location, well, that's going to start to dip into profits. So I do definitely look at those announcements. Good question.
All right. I'll take this time to invite questions. I think Kish had a question. And then as she thinks of her question, maybe you can tell us, I know you're big on stocks and indices like the US dollar index DXY. Maybe you can tell us if you trade currencies and which instruments you tend to look at if you're trading Forex. That is a big if.
Yes. Well, as far as looking at the US dollar, I use this to look at commodities. So I'm going to look at the US dollar and I'm going to say, well, hey, if the dollar is weakening, what's the hedge? Where are the big guys going? So I don't directly trade international currencies. I am an American in Canada, so I'm always looking at that pairing to see. But I don't directly trade Forex. Something I went to a presentation, goodness, I think it was 7 years ago now. And it was an ex-Forex broker. And he was like, do not touch it with a 10-foot pole. So when you're newer into the trading space and you have someone that used to work in the industry that says, don't do it. I was like, oh, okay, maybe I won't. I'll watch it. I'll learn from it. But I'll use his advice and I won't touch it, except for when traveling, right? And so I will look at the dollar and I'll look and I'll see, hey, okay, so here's the DXY. And let's, for example, put gold up, right? So we can look and see that they tend to have an inverse relationship. Let me get the same dates here to make it fair. June 9th. Okay, so roughly there. So we can look and see, hey, right here is the bottom. Oh my goodness, look at how that turned into the bottom for gold, right? And then as we move over, we can see that, hey, as the dollar topped out, the gold peaked, right? So when we look at it, it's an inverse relationship, not always, but majority of the time. So you're able to gauge it in that manner. And with everything that's going on with currencies around the world, I do follow it as far as, Lebanon crashed, Turkey crashed. We've seen Venezuela have hyperinflation. They closed down the banks in Lebanon, right? That is something to me that has a potential with BRICS, Brazil, Russia, India, China, and South Africa, pairing together to make gold-backed currencies, that it's something that could potentially happen everywhere, and how there are 14 currencies pegged to the US dollar. When the US dollar is being affected, it affects those currencies directly. When there's hyperinflation or inflation, that could turn into hyperinflation for them. And so looking at that, how they have somewhat tried to take away the power of the petrodollar. And what is that safe haven and protection for people if the US dollar were to crash, like in Lebanon or in Venezuela, in Mexico, Argentina, all of these different countries that have had these sort of hyperinflation experiences, that what can people hold on to physically to protect themselves? And for me, that's metals, as far as gold and silver. Silver has had a crazy move. Right now we are, overall, the point of control is down here at 1915. And we also, I don't know if you know about the, my goodness, now it just escaped me. Something 4 from Switzerland. Oh my goodness, I can't believe the term, it's going to come to me. There's 4 different levels and they back the banks. It's going to come to me with Wikipedia. Oh my goodness. Do you know what it is, Sylvia? It's Go
No,
ahead.
no, no,
Spit
no.
it out. Oh my goodness, I'm drawing a blank now. It's a one word
Mm-hmm.
thing. Basil, Basel 4 or Basel, Basel
Oh,
4,
okay.
Basel 1, 2, 3, and 4 requirements. There you go. And I knew it would come to me if I stopped thinking about it directly. So they made the requirements where initially the banks could have paper products. They could have futures of gold and silver to support and back those deposits. Well, as of January 1st of 2023, they're having to convert to physical deposits of gold and silver to back the deposits of the banks. So does it make sense that we've started to see a large drop in the dollar, large increase in the price of silver and gold in relation to that? Yeah, because the banks were buying a lot of it. And when you go and you look at, let me pull it up here on Twitter. There's a great guy to follow that will post daily about the COMEX supply of silver and gold. Silver squeeze. I will pull it up and I'll drag it up for you in 2 seconds here. Let me see. There we go. Michael Silver Squeeze is his name. So right here, and he will post daily. So you're able to see, hey, this is the overall vault totals, right? These are registered and these are eligible. So registered meaning this is going to be available for future deliveries, and this can be moved directly for delivery. When you look at it and you see, hey, there's over 215% of all vaulted silver is in open interest, meaning if all of those contracts today were called, 1 in 2 people are going to be served the metals. If it was just the actual eligible, 1 in 19. So that right there shows that there is a limited supply. It's a commodity, right? There's a limited supply of it. And when you look at this and you think, well, okay, we look at the big picture of Forex, right? We look at the currencies that have felt this crazy hyperinflation, that have devalued. And yet we see that gold and silver have risen during this time. So it tends to be a safe haven. And when we look back over time and we look at a weekly chart to see, is this similar to 2008, 2009? What happened? Well, silver went all the way down to 6 and it rose to 49. We're talking about 800% return on a physical item. And we've come over here, we have broken downward. I'd have to readjust this. Hold on, let's do this. Let's do this live. Right? And we're gonna have a new apex set up. So now, by April 2024, on the weekly, we should see that projected move, but we're hitting our 200 exponential, pretty good support. Is this going to hold at 2148? That would be a good reason why it's holding right now. And our point of control is down here at 17. Okay. And we see big dark pool buying. So that was a long-winded answer to do I trade Forex?
Yeah, thank you for that detailed answer. So I have we have like under 10 minutes on the clock, so I have a few questions from Kish. So she told me to voice them out for her. So she's asking, how do you normally use trend following? If you do use trend following systems, how do you use them to come up with strategies to evaluate risk? And also, in addition to whether or not you are trading, you trade Forex, which you don't, do you touch cryptocurrencies, and what are the emerging trends on that side?
Yeah, for sure. Great questions. Well, with trend following, you know, I'm really following the dark pool, right? And I'm also following the 161 EMA and 200 exponential are going to be my longer term to see what's going on. What am I looking at? And I also like the EMA cross. Okay, this one right here, right? And this is 11 over 161, right? So bigger picture, if you'd gotten in when this 11 over 161 had happened, look at how well it performed from May of 2020 up until February of 2022, right? It's been a bit choppy on the way down, which is normal because we have larger drawdowns and then it recedes back up. And the drawdowns tend to happen faster. So this is a bit better to the upside, right? You might want to shorten this a bit more for the shorter term to the 8 EMA to keep yourself more in that short trade. Because the short, and I enjoy the EMAs over the SMAs because it's going to have that weighted average towards the end. So it's going to travel closer to the price action and be a little bit more accurate. When we flip this over as well to silver, you can see it gave a bit of a delayed reaction because it was so overextended down here. But if we look at it in the past back here, again, from May up until the July of 21st, some great returns. So I do like looking at that. It's not the sole factor. Adding in volume, adding in dark pool volume, adding in global sentiment to an extent, but really the dark pool money will run the show. And to answer cryptos, yes, I do. I've been looking at the ISO coins. Do you guys know about the ISO 20022 coins?
Mm-hmm.
Yes?
Yes.
So we have ISO 20022, which is due, it's the international standard that is due to eliminate SWIFT. So SWIFT was set up in the 1950s. ISO is due to go into place this year through 2025, the digital messaging system for digital bank accounts, which were already pretty much on the way there. And so we have XRP, which is one of the ones that I'm looking at. These are more long-term holdings. I'm not so much actively trading the crypto space. I'm more holding on to it in anticipation that should the ISO 20022 be completed, that these are the ones that have been set up to run the digital financial system of the world.
All right. And
which
now,
is a whole other ball of wax going into those details.
all right. And what can you tell people? Because most people who hear of stocks trading, they think of buy and hold investing. They don't know like you can actually trade fractional shares and have a little bit piece of Google, a little bit piece of Amazon, and the big maybe tech stocks, for example. So you can tell us more about how people can actually do stocks trading to like have a day trading income or a monthly income.
Yeah, for sure. Well, that's one of the benefits. I know in the US and Canada, not so sure about everywhere, because I know in Europe they trade CFDs primarily. But in the US, you can trade fractional shares. Probably one of the #1 brokers is Interactive Brokers, which is an international broker. They've been set up to trade all around the world, and they have the ability to buy fractional shares, right? So if we look at it, again, Apple is probably one of the most heavily traded as far as the big tech names. Tesla as well is up there, probably around #2. And another way, so you can buy, say, $100 worth. You could buy $100 worth of Apple. It's going to give you just over maybe 75% of a share, or $200. So you get maybe 1.5 shares. And another way you could trade it is if you were to buy dollar worth of, if you wanted to buy a tech stock, right? So say you wanted to go to XLK, you want to go into the technology sector, you could also buy an ETF. This is stockanalysis.com.
Mm-hmm.
And you're able to sort of hedge by owning a bunch of different stocks at once. So if you put in $100, 22% of that would go to Apple, 21% would go to Microsoft. If you want to be a little bit more conservative with a diverse tech approach rather than just an individual stock, which will tend to trade generally in the same pattern. So let's look, here's Apple. right? And let's pull up XLK over here. So you can see that it tends to trade fairly similarly. However, it's not going to be exact. And if we were to do a comparison, let me take this off for now. Get rid of this trend line as well. That if we were to do a comparison of Apple to XLK, since it's only 21%, you can see this flips to percentage, that Apple is up 19.85%, whereas XLK is up 0.23% in the comparison. So you do get similar movement. However, the tech sector overall was weaker than Apple itself, if you can see that through this comparison on the chart.
Yeah. All right. And then, so as we conclude, maybe you can tell us some of the benefits of stocks trading, including the stock indices as well, and some of the mistakes you made and learned from as you're still trading. So, yeah.
Yes, exactly. Yeah, no, one of the best things, I think, especially as a mom, is once I'll go back just to main screen, so that with just being a mom, that it gives me flexibility. Like yesterday, I was sick. I wasn't in any swing trades. I took the day off. No boss to be like, hey, I am out the door. I'm sick. You know, I got to call in. No, it's, hey, you're not feeling well. It's okay. You can take the day off. The market will still be there. It's been there for over, 200 years. So no worries that it's going to be there, that you're not going to miss a trade. Hey, the market is always moving, right? Especially if you're trading Forex, it's okay. You can take some time off if you need it, and then it'll be there when you're ready. As far as day trading, that will give you and me the flexibility where I trade and I set up my trades starting at 8 and I'm done by 11. So there's some pre-market work, watching the trades set up, waiting patiently, and then trade the trade. Are there days that there's no opportunities? Yes, there's about 15% of the 252 trading days. So we're looking at about 38 days that are absolutely spectacular home run trading days. And then the others, guess what? It's going to be small profits, and you got to be comfortable with that. So not anticipating super home run days every single day is probably the more conservative. Hey, let me stick to the stops. Let me stick to the rules, because I'm going to be able to still be here later, right? That I'm going to trade more conservatively. Look at the big picture. Look for the reasons why you shouldn't get in instead of the one why you should get in, because that one could really be that fear of missing out to pull you into the trade. And then you look at it and go, oh my goodness, look, I was looking at the daily chart. We're right at a moving average. It's not going to go anywhere. I shouldn't have done that, right? So make sure you check your what ifs before you get stuck into a trade where it gives you that FOMO. And I think that's the combination of years now of saying, hey, you got to stick to stops. I was in Apple at 149.27. I said, you know what? We've got some bigger prints. It's hanging out up here a little too long. It feels like maybe it's ready to kick the bucket. If it goes up, okay, I can always get back in, but I don't want to get caught on a drawdown all the way down to maybe 132 and then go, ah. So I stopped out, right? So respecting those stops, I think that's probably one of the best lessons, is just respect the stops, because you can always find another trade to put that capital into. But if it disappears, it's that much harder to get it back.
That's the punchline for this session. And respect the stops. Yeah. And so
Yes.
we're truly grateful to have you, Jane, aka Airplane Jane. And we will link, we'll tag you and we'll link the full session after our editor does her thing. Next week, we'll have it on our YouTube channel. We'll also share it with you so you can share with your followers. Truly an honor to have you, and we'd love to have you again in the future. Thank you for always sharing your education with us. You've learned, Kish, you've learned? Yeah, she says she's learned. So thank
Awesome.
you also to Elizabeth and everyone else who will see this in the future. We hope you get a few lessons from it. Thank you, Jen. I'll let you go do your school runs and say hi to the girls for us.
Thank you, Sylvia. Will do. And if anybody has any questions, you're always welcome to reach out to me on social media or my email. You can reach me at carpeprofit@gmail.com or jane@cjanetrade.com. Thank you, and carpe profit. Sees those trades one trade at a time.
All right, bye.